Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Etsy stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 7.5 billion market cap. They're trading at $64 a share and they have 117 million shares outstanding. Etsy is an e-commerce company focused on handmade, vintage items, and craft supplies. It has a wide range of categories including jewelry, bags, clothing, home decor, religious items, furniture, toys, art, and much, much more. In order for an item to be described as vintage, it must be at least 20 years old. So that makes me vintage. I'm 47. Their website allows sellers to personalize their storefronts. Beginning in 2013, they allowed sellers to sell mass manufactured items. So it's not just individual handmade stuff. You can sell thousands and thousands of products. They have over 100 million items, 7 million sellers, and 92 million customers. The way they generate revenue is charging 6.5% of the final sale value, also a listing fee of 20 cents per item. And there's also seller services. You can promote items. They make money on payment processing, and you could purchase shipping labels from their website. Let's take a look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Really consistent free cash flow, $600 to $700 million a year. Nice margins, north of 20%. 25% in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was $500 million in 21, negative in 22, back to positive in 23 and the trailing 12 months. Net profit margin was really high in 2021, 21%, down to 11%. Net profit margin is calculated as net income divided by revenue. It's a percent of your revenue you convert to net income. Revenue is the sales for the company, and that goes up a little bit each year from 2.3 billion to 2.8 billion. Not that much growth, but at least it's going up. Their revenue per share is up to $23.55. The way you calculate revenue per share, it's revenue over shares outstanding. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 14 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $12 billion. We divide that by 117 million shares. And we get a calculated stock price of 104. They're trading at 64, so they're trading at a 38% discount. It's a strong buy according to the model. There are 45 companies in the same industry as Etsy, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't need to spend much on CapEx, only 41 million. We can't look at their debt to equity ratio. They have negative equity. They generate 700 million of free cash flow, which is really good relative to their market cap. They rank 11th in market cap. They're catching up to Wayfair and Vips. We can't look at their price to book. They have negative equity. Price to book is stock price over book value per share. Book value is assets minus liabilities. It's the equity on the balance sheet. They have a good PE, 25. They're trading at 25 times earnings. Look at Vips. It's under 8. They're trading at 11 times free cash flow. Heps is number 1, the Turkish e-commerce company. They're trading at 4 times free cash flow. You don't see that many Turkish companies trading in the US. A decent price of sales, 2.7, and they generate 2.8 billion of revenue, which is higher than the median, lower than the average. And they're still growing a lot. Their 5-year annual revenue growth rate is 33%. The average and median is 13%. If you put $10,000 into them when they started trading, 3 years ago you would have been at $80,000, but your $10,000 will be $23,000 today. It's a 10% annual return, a 132% total return. Let's take a look at their first quarter financial results. Gross merchandise sales, $3 billion. That's just for the first quarter, all their product sales. Of course, they don't get $3 billion. They just charge a small fee. Their revenue is $646 million. Adjusted EBITDA, $168 million. GMS is down from last year, but revenue is up slightly. They're investing a lot into their marketing platform. improving the customer experience. Their margins are improving. They're seeing a lot of efficiencies in this area. They're trying to improve their gifting program. That part of the business has outpaced their peers, and it's up low single digits. It looks like they hired some celebrities to help. Drew Barrymore, the Kelsey brothers. Drew Barrymore is a CGO, Chief Gifting Officer. They have gift teasers and video messages. So instead of just mailing someone or emailing someone a gift card, you could send a video message. That's a really good idea. Here's the GMS by quarter. First quarter of 2023, 3.1 billion, and it's lower in the first quarter of 2024. That's not good. It makes sense it was highest in the fourth quarter because that's the holidays, but it's really bad when you fall from the prior quarter last year. They don't seem to be growing much. If you exclude this quarter, they're pretty much flat. Revenue is up slightly. It was 641 million, now it's 646 million. Last quarter was the highest, 842 million. The take rate is how much money Etsy receives through various fees. Almost 22%. That is up from last year, of 20.7%. Adjusted EBITDA is down. It was 170 million, now it's 168 million. Margins are also down 26.6% to 26%. They're spending less in product development as a percent of revenue. It went from 116 million to 110 million. The percent is down from 18% to 17%. Product development is like R&D, how much they spend to develop new products. They had 1,750 employees. It went up to 2,000, then they trimmed it down to 1,800. As long as they could grow their revenue and grow their profits, it's fine to reduce headcount. The problem is they're not really growing their revenue. They're spending more on marketing, almost 30% of revenue. It was 27% last year, down from the fourth quarter of 31%. They're up about 2.5% in performance marketing, up a lot in brand marketing, up 59%. The fact that U.S. discretionary goods are decreasing as a percent of total consumption does not help this company. It was getting close to 18% in 2021. Now it's below 17%. Sales with their competitors, other e-commerce companies, are declining pretty much in every category, except craft sales is up 1%, but the other categories are down quite a bit. 35% of their EMS is home and living, 18% jewelry, 14% apparel, 9% craft, 7% paper and party supplies, and 4% toys and games. A big bright spot is growth in active buyers. 92 million this quarter, which is up about 2%. New buyers is down. It's down 14.5% to 5.7 million. But the reason active buyers is up is because people aren't leaving. They're staying with Etsy and buying. Even though new customers is not as high. They have low attrition, low turnover. The spend per buyer is $125, down 3.5%. Repeat buyers, 37 million, that's up 3%. Habitual buyers, people who buy a lot, 7 million, that's down 3%. And reactivated buyers, people who came back to the platform, 6.3 million, that's up 6%. Their subsidiary brands have improved a lot, Reverb and Depop. They have a capital light business model. They don't spend much in CapEx. They have 1.1 billion of cash on their balance sheet, plenty of runway, 59 million of free cash flow. Free cash flow for trailing 12 months has been moving in the right direction, up a little each quarter to 678 million. And they converted 90% of their adjusted EBITDA to free cash flow. Their 2024 guidance is a modest acceleration in GMS. We expect revenue to outpace growth and their take rate in line or ahead of present level. Here are their competitors, the top 15 pure play in each category. In the home and living sector, Wayfair, Pottery Barn, IKEA, Bed Bath & Beyond, they're in really bad shape, and some other smaller companies. Jewelry and accessories, Brilliant Earth, I've never heard of them. Helzberg I've heard of. K Jewelers I've heard of. Apparel, Nike is a big company. Lululemon. Craft supplies, Michaels, Joann's. Paper and party supplies, Hallmark I've heard of. These other companies I haven't heard of. Toys and games, Funko, Topps, Hasbro. Build-A-Bear Workshop, I heard of them. What do you think of Build-A-Bear Workshop? Active buyers was 41 million in 2019, then 47 million. Then through acquisition, it hit 90 million in Q1 2021, but it's pretty much flat since then, up a little bit, almost 92 million. There's a modest growth in the US. International growth is much stronger. New buyers is down at the lowest level, which is a really bad sign. 5.7 million new buyers. Last year it was 6.7, before that 7.1. Reactivated buyers who came back, 6.3 million, which is in line with last year, a little better than last year. How much each buyer spends, $125 in the first quarter. That is down from prior quarters. Half their GMS is US, half international. Here's their balance sheet. Cash, 788 million, 250 million of short-term investments. So over 1 billion of cash. Total assets, 2.5 billion. That's down from 2.7 billion. 2.3 billion of long-term debt. That's most of their liabilities. And they have a retained deficit. Assets are less than liabilities, so a deficit of 580 million. Worse than the end of 2023, 540 million. Revenue up a little from 641 million to 646 million. Gross profit up a little from 445 million to 458 million. And net income down a little from 75 million to 63 million. EPS is also down from 53 cents to 48 cents. Operating cash flow is up. It was 56 million, now it's 69 million. That's one of the most important metrics to look at. They had beginning cash of 914 million, now it's down to 789 million. They're bleeding cash. Adjusted EBITDA was 227 million in the fourth quarter of 2022. Now it's 168 million. And their margins are going down. 26% adjusted EBITDA margin. The way you calculate that, it's adjusted EBITDA divided by revenue. They had their highest free cash flow ever, 678 million. That's operating cash flow minus CapEx. And they had their highest operating cash flow, 718 million. So there's some positives here. Free cash flow for the first quarter, 59 million. But they really need to improve their active buyers and also how much each buyer spends. If they can improve those two things, the company should be in good shape. Let's look at the company on Simply Wall Street. Its last price, 64, 7.5 billion market cap, up 3% in the past week, down 28% in the past year. Most stocks are up, they're down. Let's see what they say about the company. Etsy operates two-sided online marketplaces that connect buyers and sellers in the US, the UK, Germany, Canada, Australia, and France. Their main site is Etsy.com that connects artisans and entrepreneurs with various consumers. They also offer Reverb, a musical instrument marketplace, Depop, a fashion resale marketplace, and Elo7, a Brazilian-based marketplace for handmade and unique items. They also offer seller services including Etsy Payments, a payment processing service, Etsy Ads, an advertising platform, and shipping labels, which allows sellers in the US, Canada, the UK, Australia, and India to purchase discounted shipping labels. They have their own purchase protection program that's designed to help buyers protect them from fraud. They have the Etsy Share and Save program to help sellers save on fees. They offer educational resources comprising of blog posts, video tutorials, Etsy Seller Handbook, Etsy.com online forums, and insights. Etsy Teams is a platform to build personal relationships with other Etsy sellers, and a Star Seller program. They used to be known as Indico, changed its name to Etsy in 2006. They were founded in 2005, headquartered in Brooklyn, New York, the place I was born. They IPO'd in 2015 at $26. 7 months after IPO in February 2016, it reached its lowest point ever, $672. And then a 40x'd. Yes, 40x'd. From February 2016 to its peak, November 2021. It broke through 280. It actually almost hit 300, but then it's been all downhill since then. November 2021 to June 2022. 7 months later, it dropped to 72. It came up to 145 in February 2023, down to 60 October 2023, and it's kind of been up and down. I think there could be more downside to the stock. I'm not sure if you want to time it, but I could see it getting down to like 30 a share. But I think it's a good long-term hold. I think once they get through this mess and start adding users, the stock will go up a lot. Simply Wall Street's valuation is 177. They say the stock is 64% undervalued. 28 analysts priced this stock at 71. Their revenue is projected to grow to $3.2 billion by 2026. Free cash flow is always positive. That's expected to grow to $867 million by 2026. Their revenue was $125 million in 2013. 2 years later, September 2015, it doubled to $250 million. Then 3 years later, in June 2018, it doubled again to $500 million. Then 2 years later, it doubled again to $1.1 billion. That was in June 2020. Then only 1 year later, it doubled again to $2.3 billion, December 2021. They are at their peak, $2.8 billion, in March 2024. What I like about Etsy is they're specialized. They don't really focus on the commodity type mass-produced products like Amazon and eBay do. They were debt-free in 2017. They've been doing some acquisitions, so they added debt up to $2.3 billion. And their equity is negative $580 million of equity. That's why we can't look at their debt-to-equity ratio or their price to book. Don't fret, they have over $1 billion of cash on their balance sheet, enough to service the debt. The CEO's salary went from $247,000 to $650,000. Total compensation $17 million. Tenure as CEO 7 years. There's been a couple of insider sells in the past year, no buys. 99% of the companies held by institutions, 1% by insiders. Vanguard is the biggest shareholder at 12%, then BlackRock, Van Eck. Then you see Fidelity, Renaissance, Goldman, Invesco, TD Asset, Schwab, Amundi. Their employee count went from 580 in 2014, peaking at 2,800 2 years ago. Now it's 2,400. The ticker trades on the Nasdaq, Deutsche Börse, London Stock Exchange, the Bern, Wiener Börse, Mexican Bolsa, Buenos Aires, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below.